AMC had what we call an at-the-market offering that was approved back in March. That enabled them to sell shares at the market, have their bankers just keep pumping and creating shares to raise up to $250 million as fast or as slow as they would want. They did about half of that prior to the mania and announced on Monday that they completed that, so raised another $125 million on the back of Monday's what turned into a 78% pop for the shares. Then today, they announced plans to do a debt for equity swap. So swap out some debt. Your debt holders now become equity holders. You create more of those shares, all to try to address the fact that they have a few $1 billion on their debt load, most of that due in 2026. So the company has said they're actively talking to lenders to try to work on addressing those issues.
AMC Entertainment, all right, it's down 20% today, but just about $1 billion of stock has traded today. I mean, this isn't pennies. This is real. And money, when it goes back to my thing, like, who's trading this stuff?
And that's what we wrote in my view, a good story, because obviously I wrote it.
You.
But we wrote a story yesterday that kind of dove into the fact that when I talk to people who advise hedge funds, these momentum quants have gotten more sophisticated, caught on to the playbook from 2021, and are buying and selling and trading these shares. So helping create that big rally we saw Monday and Tuesday, and likely getting out of the stock, whether they're in the trade for 2 minutes or 3 days. They buy when stocks are going up, and then they quickly sell. And the whole goal is to, as we wrote, basically, in a way, front run retail.
Mm-hmm. Whoa. I'm looking at is this right? AMC Entertainment's got $9 billion of debt?
That includes their leases. So call it 4.5.
4.5.
Four
okay.
and a
But
half.
still, they have...
It's sizable relative to their cash.
Rise. I'm looking at EBITDA. Let's just take 2025's estimates. 500 million. So still 10 times levered. Again, having banked these guys in the past, 4 times is the multiple is the leverage I would put on this thing. Maybe if the sub guys want to go above it, that's their business. But crazy. But at least AMC's trying to.
Yeah, I was going to say, but don't we like the fact that the CFO is like, guys, let's do this, right? That's a good thing.
It's a good thing.
And that was part of it, right? So a few years ago, they created these 8 preferred shares because they couldn't get approval from investors to sell more shares, because you have to get approval to create more shares, to expand the number of shares you can have outstanding. Right now, according to B. Riley's Eric Wold, he estimates the company still has 191 million common shares authorized but not yet issued. So they can hit another ATM, or they can continue to do some of these debt swap deals to try to address, again, the fact that they have a lot of debt and they have a lot of near-term debt. And Paul, as you mentioned, the underlying business is not really doing a whole lot.
Yeah, you think about the theater business, it goes to the fundamentals of post-pandemic. What's the demand for movies in theaters? And it is less. But it is still there. Probably the bigger issue, if you ask the theater owners today, is it's just not a lot of movies, and that was in large part because of the writer's strike and the actor's strike pushed just about everything back about a year. And then you've had some decisions by Disney saying, you know what, we probably are overplaying our Marvel stuff, our Star Wars stuff, putting it too close together. Let's spread that out. So stuff that was going to be in 24 is in 25. 25 is going to be in 26. So you put all that together, and if you're a theater owner, you're like, I ain't got that much to put in my theaters.
When's the last time you saw a movie in the theaters?
In the last few months.
Last few months?
Yeah.
Okay.
A couple weeks ago, I saw Dune 2.
Ooh.
Yeah. Well, I like going to the Nighthawk in Brooklyn where they have, like, drinks and food and they bring to your seat. Like, I like the whole experience. Like, I don't go to a straight-up AMC and just eat regular popcorn. Anymore. So I do the whole, it's cheaper than going out to dinner. Like, you can spend like $120, you see movies, you have dinner, you got drinks, you got dessert, versus going and spending $300 at like getting pasta.
And that's been the big
Prosecco, though.
You can get a Prosecco at the
that's
at the
been
movie
the big
theater.
pitch
That's
for
the whole
AMC.
point.
They want to they want to elevate it, so they're making more money in terms of margins expanded on people.
Isn't that like distracting though? Everybody's chewing and eating while you try to watch a movie.
No, they're doing it anyway if they're eating popcorn and stuff. No, it's actually, you get used to it. It's totally fine.
The seats are awesome. I will say, nice. I saw a movie on Friday, I think, and the layback seats. I'd never been to a luxury movie theater, and you're like, wow,
nice.
I'm laying completely horizontal watching a movie. This is awesome.
And the thing is, if you're a movie theater, the economics of a movie theater is you don't make really anything on the ticket sales, or as much, because you have to give half to the studio. Where you make it is in the popcorn and that's all your margin right there.
Or the Prosecco.
So the more you get, brownie
sundae.
Exactly. So
nice
the more,
kale salad.
and they've been giving you crap for 100 years.
Yeah.
some they're just finally waking up that if I really want to get that person off the couch in front of their 80-inch TV and the surround sound, I got to up my game a little bit.
Truffle salt butter popcorn. I'm gonna drop that right there. It's just beautiful. Okay, before we let you go, what is the downside, you think? Can we unwind all of the last 3 days, or what do you think?
Probably. I mean, if you look at fundamental...
As in, why not?
Well, what has changed fundamentally today versus a week ago, realistically, versus 3 months ago? Nothing, really. And that's been the whole argument when we saw the big rally, both stocks up more than 70% on Monday, all on the back of the Roaring Kitty post on Sunday evening, is that really was just kind of like the match to get people back out and trading this. It didn't actually change things. And one of the things that I think is worth pointing out is the difference between now and 2021 is people were buying stocks for the first time in 2021. The stock had already jumped, 500% before a lot of retail investors downloaded Robinhood, found out how to fund it and buy call options. People have been holding these stocks for a long time and are sitting on massive losses that if you see it go from 16 to 50 and I got in at 45, I might as well at least have some kind of gain as opposed to waiting around forever.